And good afternoon. Welcome into Market Talk for this Tuesday, January 18th. Great to have you with us once again as we get post Martin Luther King Jr. Day. I'm your host, Jesse Allen. Thanks for joining us here after the long holiday weekend in the trade. Find us online. MarketTalkAg.com is our home on the web. MarketTalkAg.com. All of our streaming sources are there. Social media, of course. You can find all of the latest news of agriculture, market information, and much more online at markettalkag.com. Well, wheat took off like a rocket here on Tuesday. Soybeans were under pressure all day, along with meal and corn. Well, corn pretty much traded firm on the session to even finish a little bit higher at the close. We're going to talk about all of this here as we again get past the Martin Luther King Jr. Day holiday and get back to trading on this Tuesday. Let's bring in our good friend Brian Splitt with agmarket.net joining us this afternoon. Brian, great to have you back on, sir. How are you?
Oh, great, Jesse. Always good to be back. Thank you.
Appreciate the time, Brian. Let's jump right into this market trade here today. We come back after a long 3-day holiday weekend, and everyone was talking about South American weather and how that was going to impact the trade. But then we come in here today, and we'll talk about that in a second. But wheat took off like a rocket ship today, and really was the star of the session. So let's start there. What did you see in wheat today that gave us such momentum to the upside, Brian?
So I think we've got a couple of things that are working in wheat's favor. Number one, wheat has had a rather significant drop since mid-December, right about the same time that the soybean market really decided to move higher on the South American weather concerns. And this is my personal belief that there's some short wheat paper that is tied to soybean length. And so as we had the soybean market open weaker last night on the change in perception on the South American weather, I think that helped bring in a little bit of buying in wheat. But we've got some extreme cold coming in, and that's going to bring in concern about winter kill. We usually have that story at least once or twice during winter on the winter wheat crops. But I think you've got a combination of that. We had both the hard red wheat and the spring wheat come down and hit their 200-day moving averages. For both of those, that also represented a 50% retracement of the move from what would be the May and June lows to the contract highs that we saw in December. And so we hit a major retracement point, major moving average. And I think with the renewed concerns about Russia potentially invading Ukraine. We also have other tensions in the same region between Belarus and Poland. So the West has been accusing Belarus of orchestrating a migrant crisis at the Polish border. Belarus is accusing Poland of firing shots across the border. And so all of this is happening in a very small region. And so when you've got the Polish Belarusian concerns and then the concerns about Russia and the Ukraine, it just does not make sense to stay short that market. So I think you've probably got, what, is that 4 or 5 different influences that said, hey, wheat needs to go a little higher right now.
Yeah, at least there. And you look at those markets, and I know they had become oversold. You mentioned going down to the 200-day moving average. And, we at one point here towards the end of last year, a lot of folks were talking about wheat being the upside leader in these markets. Do you think wheat has the potential to become the upside leader once again in the grains with all of these factors out there that you mentioned? Or is this maybe just a one-off, so to speak?
I think based on some of the signals that we saw today, I wouldn't be surprised if wheat took over leadership, at least for the short term. I don't know if it's going to be the leader big picture going into summer, but I think considering the geopolitical tensions that we're talking about, wheat did post an outside day higher. So you look at the spring wheat made a new low for the move actually early in the night session, closed well above the Friday high. Same thing with the hard red wheat, made a new low for the move during the night session, closed above Friday's high. So you've got some very good technical signals right now. And we had mentioned the 200-day and the retracement levels. So I think when you look at wheat versus corn, that relationship has been in the favor of corn for the last several weeks. So I think we could see some liquidation of that position, where the trade would be looking at buying wheat and selling corn and unwinding that spread. So I think, especially if South American weather looks to continue to be more beneficial for crop, then you're going to see the soybean market become the weak link overall. And again, I think that points towards some more liquidation of that short wheat paper versus the long bean paper. So yes, I think that we could see the wheat market go back to being a leader for the next 2 to 3 weeks.
Let's talk more about soybeans and that South American weather picture. We got through the long weekend. We saw some better rains in some dry areas of South America, and that forecast calling for more rain in some of those dry areas. And that seemed to be the reason why we opened weaker in soybeans and in meal to start overnight. And that continued into the day session here today. What's your thoughts overall with this soybean complex? We did come off the lows, which was a good sign here at the close today.
Right, we did come off the lows, but we did not get back over what I would consider the resistance that is in place right now, where I would say, hey, now that we're back over resistance, the market might come in and consider buying this. We still closed below the low from the report, and that would be that January report that we had last week. So basis the March contract, that is the 1266 and a half. Or I'm sorry, 1366 and a half. 1370 has been a major pivot point on the bean contract. So if we can get back over that area, then maybe we'll bring in the technical buyers again. But I think the inability to get over those levels, if that's what we see over the next couple days, is likely to bring us back down towards 1335. And I think that would be some very good support. Just me kind of thinking ahead and what could happen and looking at the chart and how that might progress. If we did see beans work down to 1335, hold there, it looked like a 50-cent rally would bring it back up to some resistance. And that might look like a right shoulder on a potential head and shoulder topping pattern. And let's not forget that, as we go through, we're going to be looking at the acreage scenario in late March. And if we start trading that as a bearish influence on the market, that could bring this bean market right back down to where we were in mid-December when this rally started. And so I'm going to be looking at right now rallies, little short-term rallies as selling opportunities against those resistance levels with a target of that 1335 area, which I think at that point, if I'm short, I'd like to be flat. If not, maybe take a stab at the long side there.
I saw the Nopa crush reported to be record large for December. Any thoughts on that, how that's maybe playing into the soy complex?
Well, if we're going to see some concerns about the crop in Argentina, Argentina is a country that will process the beans and export the meal. And so we are going to need to see the continued very strong crush element for domestic demand. The margins are there domestically. So when you look at board crush, and it did take a hit today with the bean meal being down sharply and bean oil being up slightly. But it's still very fantastic margins from the crush perspective. So I think that's going to continue to be a bright spot for domestic demand. So right now, really big question is, how does China react? We've seen Brazil offering soybeans at a discount to U.S. soybeans, even through the concerns about some of the growth in their southern growing regions. I don't want to forget that we kind of lived through this last year, Jesse, where Conab had walked their bean crop down to 129 million tons just to have it actually come to fruition at about 137, 138 million tons. And I think we're in the process of doing that again, where we estimated the amount of losses. And then when everything is said and done, we'll have losses, but they probably won't be as bad as what we were pricing in. And I think that'll, be a bearish force down the road. And maybe that's, again, at the time that we start looking at our domestic acreage situation. We've had corn relatively static here for a new crop in this 550, 555, 560 zone. And we really had new crop soybeans make a push to new contract highs while corn was static. So if there was a concern about soybeans taking some corn acres previously, I think we should be even more concerned about that based on the recent moves we've had over the last month or so.
That's a great point you make. Let's talk that corn market a little more. I said this morning to someone that I felt like the corn market today was just caught in the middle between wheat and beans. Wheat trying to pull it higher, beans trying to pull it lower. We ended up finishing slightly higher in corn today. And really, corn has held up well the last however many sessions, right around that 5.90 to $6 window on the futures trade. What's your thoughts with this corn market and where it sits right now?
So I'll tell you what corn has done that I think is very positive. We had a sell-off early in the year. January 3rd was the first session of the year, and March corn made a low of 584 and 3/4. And so what's positive to me is that after the report, which the report was not a bullish report, we didn't have a reduction in stocks that it was not anticipated. We didn't have a drop in carryout, and actually the carryout moved slightly higher. So I think most would say that was a more of a neutral report. But we did sell off a little bit after that report, and we went down to 585 and a quarter both Thursday and Friday of last week. We were unable to make new lows for the year. And so I think the inability to make new lows for the year has supported the market. You get a rally in wheat today that gave corn a little bit of support, kind of shrugged off the lower bean market. And so I'm going to be watching kind of the short-term downtrend that we've had off the highs. March corn made a high of 617 and 3/4. And, so we're going to see downtrend resistance just above $6 here. If we can see this wheat market continue to push higher, then maybe we can get some more strength in corn. But one of the things that we really did, in our firm after that report last week was come in and sell corn straddles. The April corn straddle at $6 strike price, and that means we're selling the call and the put and collecting the premium from both sides. That was paying 48 cents a few minutes after the report. And we really thought that based on the report, it would be very difficult to make some new contract highs in the next 60 days, but also that we would continue to see support near the November lows, just above 560. And so if we can stay below current contract highs and above the November lows, then we've got a position that should remain profitable for the next 60 days. And that those options will be gone before the March quarterly stock and planning intention report. And that's kind of where I feel the safest in corn. Not that I'm not going to trade it at resistance and support, but I think for a long-term outlook, I could see corn going more or less sideways for the next short-term period.
Overall, with the grain and livestock markets, before we dive more into livestock, I know inflation worries are out there again. We see the stock market down sharply today. What are your thoughts with where things sit over in the macro markets here as we get into this week?
Yeah, you look at the S&P, and I know it's down sharply, but we're right at good trend line support. The 100-day moving average on the S&P has been a very good level of support. So, will we take that out and make another leg lower? It's definitely possible. And if we do start to see the S&P offered below the 100-day, that would break a trend where the funds have been willing to support the S&P at that level each time we've gone down there the last 2 or 3 times. So as of right now, we went down. We hit the 100-day moving average on the lows today. We saw some buying come off of it. Same thing with the Dow. We went down and hit the 100-day moving average. The Dow seems to be holding in the best relative to the most recent highs. When you look at the 3 major indices, the Dow, the S&P, and the Nasdaq, dollar had a really strong move today. We had taken out some support as we've started the year. We're right back up into that area, so we're kind of retesting some resistance on the dollar. It'll be interesting to see how that market pans out. But that was something that made the gains in wheat look even better today, was the fact that the dollar was sharply higher and wheat really didn't care. And that's usually not the case.
Let's talk livestock, Brian. And looking at things today, cattle market again under some light pressure. We see a little bit of trade activity in feedlot country, but processing speeds, there's a lot of worry there about that impacting cattle. Some inflation concerns impacting the livestock sector too. But What's your thoughts with this cattle market here as we start this week? And it seems like we have more of the same with just a lot of those worries out there about the processing speeds and maybe getting some lower cash cattle trade out there possibly.
Yeah, it's kind of a pull in two different directions here because you've got the concerns about the labor issues and the slaughter rates. Yet, that causes the box beef to trade strong. And so we had, a day last week where box beef was up and the futures were up. And it seems like right now the futures in live cattle are rather content where they are. You look at the feeder cattle contracts have been in a $2.50 to $3 sideways trading range, and it seems very content to continue to remain in that range. We've got uptrend support coming in feeder cattle just below the current futures values. And so, right now, I really don't know what to think about the cattle futures. The cash market's going to have to figure out what it wants to do. And if we can't support cash values up here, then, the live market will move back and put under pressure from that. But I know we've got some gaps above the market that we might want to go fill. March feeder cattle have a gap to fill at 169.22. And I still think if we can hold this uptrend support that we've got from those October, November lows that were made, that we're likely to go back up and fill those gaps sooner rather than later.
What about this hog market? Real quick here as well. I know some of the same worries with chain speeds are there, but hogs have been faring a little bit better. Decent day today. What do you make of the hog market here as we start this week?
Yeah, almost the opposite of cattle. We had a gap higher last week, and we're getting right back up near some of these previous highs. I don't know if the lean hog market can sustain these gains based on some of the talk of the increase in the size of the Chinese herd. We'll see how that plays out in the big picture, but I'll be looking at some of these recent highs that were made in early January as potential opportunity to sell against resistance with a reasonable risk reward. Much like the cattle, if the hog market cannot take out those highs, then I think we'll turn back down and revisit that gap area below the market. And like I said, in the cattle, if we can't take out the uptrend and trade below it, I think we'll go right back up and fill the gaps above the market.
Well, Brian, great stuff as always. Any final thoughts you have for us here on this Tuesday you want to touch on?
Yeah, anytime you ask me for a final thought, and we have the conference coming up, that's what I'm going to talk about, Jesse. So if you're not aware, we do have a conference in Indianapolis on January 31st and in Kansas City on February 7th. So you can go to our website, www.agmarket.net. There's a banner right at the top. You can click on that for more information and to get registered. Got a good lineup. David Hightower will be doing his big picture commodity outlook. We'll have some weather outlooks, and then our own staff will be doing their presentations. So please check that out and register if you're interested.
And I will echo Brian's sentiments. A great lineup of speakers for both those, Indianapolis, Kansas City. More details, agmarket.net. With that, Brian Splitt with agmarket.net. Appreciate the time, sir, on this Tuesday. Thanks for joining us. We'll talk to you again soon.
Yep. Thanks for having me, Jesse. Appreciate it.
Brian Splitt with agmarket.net joining us today. That's going to do it for Market Talk on this Tuesday, January 18th. Find us at markettalkag.com. I'm Jesse Allen. Have a great afternoon.